Tariffs have been causing extreme havoc. We've got giant sell-offs in the stock market, rates are on their way back up, and consumer confidence is not looking great. Is this the beginning of the end for real estate investors? Let's find out. My name is Ryan Dossey, and I've been in real estate investing for the past 10 years, and I've been licensed since 2016. The first thing we have to understand with tariffs is that it's not a 25% tax that you're going to pay in a store. It's not even a tax that's added to the retail price that consumers are paying. It's a tax on the cost of goods that the manufacturer is paying. I saw a really clean example of this that had to do with Nike shoes. Now, let's say Nikes are made in a country that's currently facing a 25% tariff. Well, if Nikes are $100, that doesn't mean they're going to become $125. Realistically, let's say for the sake of this argument, that they're paying $10 for that shoe. Well, their cost for that shoe went from $10 to $12.50. It's a much less significant impact than if their costs went from $100 to $125. Now, I run a real estate channel, so let's not talk about shoes. Let's talk about paintbrushes.
Wait, what?
So hopping here into my computer, we've got paintbrushes that you can order in bulk. Now, these are from China, but the cost is only 20 cents. I don't know about you, but I've not gone to Home Depot and bought a paintbrush for 20 cents. In fact, Home Depot sells something similar for right at $1.47. So even if China is hit with a 100% tariff, this paintbrush isn't going to $3. Realistically, the cost on it's going to 40 cents. So even if that entire additional cost got passed to us as real estate investors and agents, we're going from $1.47 to $1.67. Now, there's a lot of emotions around President Trump as a whole and tariffs in particular, whether or not they're good for the economy, bad for the economy. We're going to see, but let's take a look at what this is doing to building materials. I've seen a lot of folks running around talking about the sky is falling, but let's look at the actual data. So this is data from the Federal Reserve Bank of St. Louis. This is their producer price index on the commodity of construction materials. If you're in real estate, if you're in construction, this is something that you're probably keeping an eye on, like, are our costs increasing? Well, let's take a look at the data. So looking at a 5-year screenshot here, currently we're at 334 on the index. That's not even the all-time high. Back in May of 2022, we were at 353. In fact, let's look a little bit closer. If we look at just the past year, we can see that this time a year ago, we were at 330. Right now, we're at 334. So that is a 1% increase. Now, this is a vertically trending upward line, so I'm expecting as April's numbers get added that we're going to likely see that trend continue, but at the rate this has been accelerating, doesn't really feel like the sky is falling. So from a real estate market update perspective, rolling into May of 2025, what we're seeing right now feels pretty similar to what I called the presidential pause back in November of last year. We have a lot of people kind of just like waiting to see what happens. It almost feels like when a certain thing started back in 2019, early 2020.
Where's your mask?
Where's your mask?
Where's your mask?
Where people were like, what's going to happen here? I think we have a lot of that fear and uncertainty in the market right now with tariffs. In order for real estate to become sexier or more lucrative or more inventory to be trading hands again, we either need things to get worse so that interest rates get lower, or we need to see consumer confidence in the general direction the country is going pick back up. So if you're an active real estate agent or investor wondering, how do I prepare for the potential impact of tariffs? Let's get right into it. First things first, you want to shop at businesses that are primarily American. For instance, we buy a ton of our materials from Sherwin-Williams, paint and flooring. They're headquartered in Ohio, but on top of that, they have manufacturing facilities in multiple places in the US. They're actually creating a lot of their products right here in the country. Now, that's not to say that they might not be sourcing raw materials from countries that are getting tariffed, but go back to point one. what is the material cost versus what is the retail cost of that end product. Second tactical thing you can do is start to support local supply houses. Recently, on my own home where we're currently sitting, I went and got a quote for windows. Now, I'm in a high wildfire area, so I have to do triple pane glass. It's like the black on black. Basically, some of the more expensive windows you can get. When I went to Home Depot, my quote came back at north of $50,000. When I went to a local window supply shop, the exact same materials I could purchase for $37K. When I showed Home Depot the quote, the guy literally laughed and said, yeah, we can't touch that pricing. So it might be a little bit less convenient to go to a kitchen and bath supply store, a paint and flooring supply store, and a window supply store. But for the savings, it's definitely worth it. The third thing you can do is look at sourcing materials locally. For instance, if you're in the Midwest, you might look at what the Amish are charging for things like cabinets and vanities. I'm a big believer of, even if I'm going to pay a little bit of a premium, if I can get a superior product for that, great. Realistically, I don't know how they would even know that there are tariffs right now.
Oh, right, because I'm Amish.
If you're somebody in real estate that's involved more on the transactional side, so you're a real estate agent, you're wholesaling, you're doing more wholetailing, like you buy a house, clean it out, turn around and list it on the market, potential increases of 1% on building materials in the last couple months likely isn't going to be the end of the world for you or your buyers. I think what's going to be more of an issue is just overall consumer confidence. And if the market slows down a little bit, feeling like it's Q4 again. If you're somebody that's flipping houses or looking for rental properties, you might focus on finding deals that are smaller rehabs. One of the things I think that's not often talked about is the ratio of purchase price to repairs. In an ideal scenario, more of our cash goes to the purchase and less of it goes to the rehab. You're much less likely to get hurt on that, and the impact of tariffs on a smaller rehab should be smaller to your bottom line. The projects that I've gotten hurt on in the past, those were flipped. I was buying a place for $20K that needed $200K in work versus that $200K place that needed carpet paint and maybe a roof. If you're starting new larger projects, things like maybe new build developments, or you're doing like 50, 60K, 100K plus remodels, I would encourage you to build in some additional buffer on the front end of your acquisition. Meaning you need to be getting really good deals. Historically, maybe you've been budgeting for 5 or 10% in overages on the construction side. You might want to bump that to say 15%, or maybe have conversations with some of your subs and suppliers of, hey, is this impacting you guys? Are you seeing a change on pricing or not? Is there anything that we need to prepare for? Different manufacturers and even different industries are handling tariffs very different. You have, on one hand, Porsche, for instance, that imported cars pre-tariffs going into effect in bulk and has pretty much said, hey, the cost of our cars is gonna go up. They've already raised some things like import fees. Whereas on the flip side, same industry, autos, you have Volvo that has come out and said, hey, our prices aren't going up. I don't know how they do that, but that's what they've come out and said. So you might have one supplier that says, oh yeah, our costs are coming up. You have to prepare for that on your next order. You might shop around though and find a different supplier that says, hey, our prices are relatively unchanged, or they're going up by something more minuscule. I think the moral of the story here, if you're a real estate investor, is now is not the time to buy marginal deals or sell yourself on opportunities that are skinny. Fortunately, that's what this channel exists for. We teach you guys how to find your own deals, whether it's as an investor or a home for your family. If you haven't already, be sure to like and subscribe. My name is Ryan Dossey. I appreciate you hanging out with me.